We are 15 minutes to the top of the hour. Mark Oppel, thank you so much for joining us. We're all are part of our Market Day Report, whether watching RFD TV or many tuning in on Sirius XM. Let's go one last time to Chicago. CME Group in Chicago, to be exact, and on the floor live, good friend Oliver Slope. Growing up in Nebraska, you're a big Red fan, aren't you?
Go Big Red.
Well, there's a lot of going on in the Big Red State and around the country here, Oliver, from II Trader, by the way. Thanks for your time today. A little quieter trade here leading into all the numbers tomorrow, as I guess we might expect.
Yeah, it seems a little bit quieter compared to what we've seen throughout the beginning of the week, especially yesterday. Obviously, it looks like a lot of producers are taking some risk off the table, as well as some of the funds that have built a pretty sizable long position. I think taking some risk off the table ahead of tomorrow's USDA report. Yesterday's price action in the July corn was pretty good, but closing off those highs kind of puts a little caution flag out there. 440.5 was a big number to keep an eye on. We weren't able to get above that. That was last February to May major resistance. And the RSI was well overbought in the 77 area, which is at the top end that it's been through the contract's life. So we saw some long liquidation. Now we're coming back here in support. 419 to 423 was previous resistance. That needs to hold on a closing basis. But even if that gives way tomorrow, 411 is the number that you're going to want to keep a very close eye on. If we trade down to 411 and they're able to close above that, it keeps the bull trend intact.
Very good. And that leaves us looking at the soybean trade next in line. Oliver Slope joining us live from Chicago. Always great to hear the numbers and kind of watch as you watch this corn, soybean, and wheat trade. Talk about numbers. I'm not sure you're talking about July or November beans, but give us what you're looking at there technically.
Well, to make it easy, we'll just stick with the July contracts. 1162, 1166 is kind of what we're looking at here in the intermediate term. Wouldn't be surprised to see a flush out below that, maybe clip some stops going into the report. Below that, really not a whole lot in the way until 1142, which should hold up as good support. We know that funds have a massive net long position, and I expect that they're going to continue to try to squeeze some of these shorts. Yesterday, we saw that big rally higher, and I think a lot of that was margin calls coming into the market. People who try shorting the market got their margin calls and had to buy to cover. So we saw that bid come into the market yesterday, and I wouldn't be surprised to see something similar going into that report maybe after. 1216 on the top side for that July contract is what we're keeping a close eye on. I know it's a ways away from where we're at, but you know how the soybean market goes. You expect the unexpected. That 1216 level is the high that this contract has ever traded. Very good. All right, that leaves us look. So we're up a little bit here in beans, down a little bit in corn, but beans are up a penny in July, up 4 3/4 on the November. How about the wheat trade here? Wheat seems to have been the weakest of the three all session. Yeah, it definitely has. I think a lot of the weakness in the wheat comes from the stronger dollar. Yesterday, we had a weaker dollar towards that 93.50 level. We've rebounded nicely above 94 for that U.S. dollar index, which has put pressure on commodities really across the board. And the grains really kind of taking a hint from that. 498 to 502, a psychological number as well as a key Fibonacci retracement level that needs to hold on a closing basis. If we fail to hold that level, wouldn't be surprised to see more downside towards the 470 level. July, Kansas City down 7.5, and Minneapolis, the July contract down a couple of cents. Just a few seconds here looking at cotton, if you can, Oliver, and look at the cotton trade down again here on the day, $65 around that July contract. Any thoughts there? I still like cotton. I'm kind of in a buy the dip mentality. We're coming up near some support levels where I think you really might have some good value to the upside. It's been pretty strong. We failed out yesterday above technical resistance, so we saw some profit taking, and that's carried over in weakness today. But ultimately, I still like the trend higher for the near term. Very good. Oliver Slope live from Chicago at CME Group. We'll take a break, come back, and take one last look at the livestock trade with Oliver Slope in 1 minute. Be right back. Welcome back to Market Day Report. We are 10 minutes to the top of the hour. Let's go back to Chicago and Oliver Slope live at the floor at the CME Group. Oliver, thanks for the comments there leading into the crop report tomorrow for our grain producers, buyers or sellers in the grain complex. But a lot of numbers important to the livestock trade as well. What do you make of this follow-through, call it that or not, in the lack of follow-through in the beef trade after the run-up yesterday? Well, I think a lot of the weakness in the meat market today comes from really the U.S. dollars we talked about in the grain segment kind of putting pressure on commodities as a whole, not just the ags, but if you look at oil and a lot of other commodities out there, they're seeing weakness from that stronger dollar, as you'd expect. But we've also kind of reached the top end of the recent trading range. For the live cattle in that August contract, 120.67 to 121.77 is the recent highs and the 200-day moving average. So we've kind of stalled out against that, which I think has brought some sellers and some profit taking into the market. And I wouldn't be surprised to see that continue down towards the 116.78 to 117.22. That's kind of the area we're looking at to hold as pretty good support for that August contract. That's the 20 and 50-day moving average.
All right, over in the feeder cattle, so we're higher, 30, 35 points on the front end live cattle futures contracts. Looking at the feeder cattle trade, boy, what a back and forth week. What surprise there. Kind of been their trend, but a little bit higher as we sit here going to the top of the hour with the August over near 147.5.
Yeah, and they're trying desperately to form a bottom, which I think is healthy to see. We need to see these support levels hold, obviously, 142 being the key level. We're holding that, I mean, really well. We're above that significantly in some people's terms, but we really need to get out above this 148.55 level, and that presses us towards the 151.65 area to 152, which is a 100-day moving average, as well as the May highs, kind of the top end of the range. Ultimately, I do think that we are in that bottoming stage, and we're going to start to build higher highs and higher lows, which will be very friendly and constructive for the bulls in this market.
All right, and then turning to the pork complex here, we looking at the thousands, 20-some thousand plus gathered in Des Moines, Iowa for the Pork Expo, and they're looking at a hog complex that's been very strong for several weeks.
Very strong. We had that massive breakout. We're pulling back a little bit today, which I think is, very healthy in the market. We're looking at the August contract for that too. I think 83 is a healthy number to see a pullback to. That's the 50% of the recent range higher. So a pullback to 83, I think, invites buyers back into the market. That RSI, or the relative strength index that we look to so often as an indicator to see how overbought we are, just got so overextended here recently that long liquidation was, inevitable, and that's what we're seeing today. Wouldn't be surprised to see that continue to finish out the week, but ultimately we have been very constructive in the lean hogs, higher highs, higher lows, and I like it as a buy at the 83 level.
Very good. Oliver, thanks for your time here today, and we look forward to getting a closing comment for you tonight during our evening news.
I'm looking forward to it. We
are too. Thank you. Oliver Slope, live from Chicago. Let's get those numbers one last time as we turn it back over to Janet, looking at live cattle futures right now. Up to the moment, the August cattle futures up 28, 119. October, also an active trade, is up 22, and they're now 118.10. Feeder cattle futures on the day are mostly higher. The front end August, though, a little bit lower, only 2 points now, though, 147.35. Oliver looking at the $83 level on a hold. The September is up 20. And finally, hogs, one more time. Lean hog futures higher on the day, nearby June anyway, is up 73. July down 77. And he says still, with a lower trade, that can be healthy with what we've seen.
All right. Thank you very much, Mark.
Sure.